In this video, I'm going to give you a brief overview of what FHA loans are and why it's not a good loan here in the Bay Area. So let's go. Hey guys, it's Mac Rogers. I'm a real estate broker out here in Castro Valley, California in the lovely East Bay of San Francisco. If this is your first time on this channel, welcome. On this channel, I talk about living in the East Bay. What is it like living here? How much does it cost to live here? Where do you live here? What do you do here? And I also do talk about real estate updates or real estate tips and advice for home buyers and home sellers, just like this one. So what is an FHA loan? Well, first of all, what is FHA? FHA stands for Federal Housing Administration. The Federal Housing Administration insures all FHA loans. It's important to know that FHA does not directly lend or give out mortgages. FHA approved lenders are the one that gives out mortgages. So you have your regular banks like Bank of America, Wells Fargo, and other mortgage brokers that are approved by FHA. FHA loans are normally associated with first-time home buyers, but it's not just for first-time home buyers. Anyone can avail of FHA loans. So why choose an FHA loan versus a conventional loan? Well, in my experience, the number one reason is down payment. With an FHA loan, you can get a house for as low as 3.5% down payment. Now, there are loan limits, so you can't just make an offer on $1 million home and put down 3.5% and expect to get a loan. The maximum loan limit for high-cost areas like the Bay Area is $765,500. So that's the maximum loan that you can get. Now, you can still get an FHA loan for that $1 million home, but instead of 3.5%, you need to make up the $765,000 and the $1 million difference as your down payment to get an FHA loan. The second reason in my experience why home buyers choose FHA loans is that they have low credit scores. With an FHA loan, you can have a credit score as low as 580 and you can still qualify for 3.5% down payment. Now, if you have a credit score below 580, between 500 and 579, you can still qualify for an FHA loan. However, you will need at least 10% down payment. Now, I gotta be brutally honest with you, okay? If you have low credit scores, you probably should not be thinking about buying a home right now. But this is a free country, and if you're qualified to do so, I would love to help you out. Here's another thing that you need to know about FHA loans. FHA loans have mortgage insurance premiums that you need to pay. There's two of them. One up front where you can incorporate it into your closing costs and pay it up front, or you can incorporate it in your loan, meaning finance it. And usually it's about 1.75% of the loan amount. The second mortgage insurance is monthly. Now, the monthly rate also depends on your the loan amount and your credit scores. So I'm not gonna go deep into that. If you need more information on that, I think it's better off that you talk to an actual lender and see what you qualify for. So let's just review from the overall requirements that you need to get a FHA loan. One, 580 credit scores qualifies you for a 3.5% down payment. Anything below that, 500 to 579, you can still qualify, but you need at least 10% down payment. Then we also talked about the mortgage insurance premium. And also to qualify, you need to have a debt to income ratio of 43% or less. Now, I'm not going to spend too much time on this. Again, this is something that you need to talk to your lender about. But I've also seen buyers qualify for FHA loan up to a debt to income ratio of 55%, as high as 55%. Borrowers must have a steady income and job. I think that's a given. The main question that I get from home buyers is that, what if I have a new job? Well, the question to ask is that new job a continuation of your old job? Meaning it's a step up. It's not like you have a gap between jobs. If that is the case, you're still gonna qualify for an FHA loan. But again, talk to your lender about this upfront so that way they know your situation and can look into it right away. Now, in order to qualify, it also has to be your primary residence. It cannot be your investment property. But here's a good thing. You can actually buy multifamily, duplex, triplex, or fourplex. You can buy that and qualify for an FHA loan as long as you live in one of the units. And also, if you buy multifamily unit, the loan limits change. And here's the different loan limits for a duplex, triplex, and a fourplex. Okay, so I mentioned earlier that, why would you get a FHA loan compared to a conventional loan? Here's a quick comparison between an FHA loan and a conventional loan. As you can see, credit scores for an FHA loan goes as low as 500. On conventional loan, it goes to 620, but you're going to be needing a lot more down payment. Typically, what I've seen is around 25% if your credit scores is around 620. So we talked about the down payment. Terms are fairly straightforward. Mortgage insurance, some conventional loans have mortgage insurance built into the rate, meaning you pay a slightly higher rate as opposed to having a monthly mortgage insurance separate from your mortgage. Now with down payments, FHA allows 100% gift, meaning if let's say your 3.5% is going to come from your family, friends, relatives, whatever, that it can all be as gift. On a conventional loan, that's not allowed. And then finally, FHA loans allow for down payment assistance. So there are still programs out there that that gives you down payment assistance. With conventional loan, it's not allowed. Now, in the beginning of the video, I said that FHA loans are not good in the Bay Area. Now, why did I say that? Well, first of all, let me say that I'm talking about the following counties. You got Marin County, San Francisco, San Mateo, Santa Clara, Alameda, and Contra Costa County. We're going to talk about those counties for FHA loan. Now, these counties that I mentioned, they're very competitive. Most of the time, you're not just competing with 1 or 2 or 3 bidders or buyers on a property. Most of the time, you're competing with 5 to 10 buyers. So what tends to happen is that a lot of the people that you're competing against, they have, at the very least that I've seen, is 10%, 20, 30, 40, 50%, even cash buyers. So it's very hard to compete in those situations. So what tends to happen is that even let's say you make a very competitive bid in terms of the price, sellers tend to look at that as, okay, so they only have like a 3.5% down. What if the property doesn't appraise? How are you going to come up with the difference if that was included in the contract? And also another thing, FHA loans have a little bit more stricter underwriting guideline. So the chances of a fallout between you and someone with, let's say, a 20 or a 30% down, yours is probably going to be a little bit of a riskier proposition or a loan than someone with a 20 or 30% down payment. So this is the main reason that I say it's not good here in the Bay Area, mainly because of competition. So in today's market conditions, having an FHA loan actually gives you a disadvantage. Now, in other Bay Area counties like Napa, Sonoma, Solano County, you might have a better chance if you have an FHA loan, mainly because number one, there's a lot more houses over there or a lot more inventory. And number two, the prices of the homes over there tend to be a little bit lower than the immediate Bay Area. So the bottom line is this: if you're competing with several other offers and you're the only FHA loan out there, your chances are going to be lower. Now, does that mean no, don't go with an FHA loan, don't get pre-approved? Of course not. There's going to be situations that you're going to be able to get in, you're going to be able to get a house. I've done it for a lot of my clients. It just takes patience and really just making sure that your expectations are in line with what's going on in the market. Another question that I get that I forgot to cover is that, can I use an FHA loan for condos? Yes, you can, as long as the complex is FHA approved. If it's not FHA approved, obviously it needs to get to an approval process. And it's fairly easy. It just takes a little bit of time. Hey, thanks for watching, you guys. If you have any questions, you know how to reach me. I'll see you in my next video.